Hi, I'm Ken from Crypto Trading KS. It's great to see you again. Let's run the numbers. Bitcoin currently down 6.21% to 61,758. Ethereum down 7.48% to 43.46. My goal is to assist you to be more of a financial blessing to yourself and those you love, and also gain real wealth in the process. We can see a bit of red across the market at the moment, but if we zoom into the KS model, we can see price is just making its way upwards. We're in the bull market psychology section of the current run, and we expect higher prices. Just one thing to bring your attention to, these particular lines here are just the lengths of the previous cycle. For example, this blue line, which is called the blue sun, is this length of the 2012 halving cycle. This green line here is the 2016 halving cycle, which lasted 526 days. You can just see it there. They're not targets or anything like that. It's just to show you duration. I definitely believe mathematically that the minimum high will be 132,418, and I still believe the target date of the 25th of May 2022. Turning to Bitcoin's technical analysis, Bitcoin is currently trading at 61,660. We can see there's been a little bit of a sell-off. Now, why is this? If you look at the actual price action, this is pretty normal stuff. When we look at Bitcoin, it's always moving in a wave. It's a highly volatile asset class. Many people look at the market and they see a swathe of red and they just freak out. There's no need to freak out. This is just inherent in the mathematical properties of Bitcoin. When looking at investment substitutability, the reason that we have such high percentage gains for Bitcoin over time is because of this inherent volatility. It's really hard to put up with if you're new to crypto, but if you're old to crypto, you just understand it and you say, well, they're at it again. Looking at the chart review, because this is the single most important thing to do, use probabilistic fearlessness. That's basically, you look at the chart, you say it's in a good uptrend, it's finding support. It has good support below at 61,897, and if it loses that support, a healthy retracement to 55,590 and even 49,305 would be completely fine. We do have some headwinds coming up at the market, but that's not anything to panic over. Point number 2 is don't panic. It's really important to understand that Bitcoin is highly volatile. This is why every day we have this little chat, make in advance probabilistic choices. If things go parabolic and they go up and up and up, what will you do? If they go down, like what is happening right now, what will you do? If it just goes sideways, what will you do? We also say each day, Rule 45, no alt can escape Bitcoin's gravity. This is exactly what Bitcoin's gravity looks like to the downside, but it also looks the inverse of this when it goes to the upside. In about 5 days' time, we have the Mt. Gox remediation. We also have the debt ceiling issue, which is about 16 days away, and Evergrande could be an issue in about 40 days. As always, we do not panic about these things. It's really important to be aware of them, but we certainly don't panic about them. The question is, why don't we panic? If there's negative news, shouldn't we just bail out and just sit on the sideline? Absolutely not. The concept is, when there's negative news, of course we get retracements. They're ideal situations to get into. And you can note here from the 2016 bull run, retracements don't just last one day. They go 5, 7, 9, even 11 days. It's really important to know that. A lot of people say, I bought the dip in the first day, and then they say, oh, I bought the dip again in the second, and the third, and the fourth. And they say, how long is this dip going to go on for? 5 to 11 days, basically. This is why you can sometimes just chill and just look to place your orders very, very low, unconscionably low, and hope for a long tail rejection. As we saw here in the 2016 bull run, when price got above the peak, it wobbled around like what we're seeing now, but when it finally broke out, many people around here would have said, oh, I'm never going to get it cheaper. and it just pole vaulted up and up and up. But look at this retracement. This retracement brought it back to just around here. We don't have to time the exact bottoms or exact tops because we don't know where they are, but we can do probabilistic guessing, if you like, just like we look into any particular thing and we just run the numbers on it. The Mt. Gox situation I covered in episode 296. You might like to have a look at that one. Mt. Gox is certainly holding some reserves. It has around 137,890 Bitcoin to remediate, to give back. We do need to keep our eye on the Evergrande situation. And when I say keep our eye, not from a panic perspective, just keep our eye on it. How do we do that? I've done this little bit of analysis for you. Evergrande is just one of the major property development companies in China. You can see that represented in this blue line here. This is also a chart that goes from 2022 all the way back to 2011. We can see Evergrande came up substantially, that blue line, and then when it couldn't meet its debt repayments, it plummeted down to here. This gives us a very good understanding how the property market in China is going. We don't have to read the news, we can look at the charts. Evergrande, which is the ticker 3333, has sales in 2021 of 571 billion, and its net debt is actually 396 billion. It employs 163,119. This is from marketscreener.com. Fantasia Holdings, which is ticker 1777, has about $23 billion worth of net debt. Greenland Holdings has net debt of 226 billion. Country Garden has net debt of 168 billion. Vanke has net debt of 107 billion. This adds up just between these five companies to 920.11 billion in net debt. A lot of news stories just cover Evergrande and sometimes Fantasia, but the interesting thing is if we look probabilistically, if these prices, these stock prices, tend to come up, like for example we can see that they came down but they're starting to turn around. If they turn around, well, that's fantastic. That's what we want. We of course want people and companies to get through their issues, and we can just be objective about they are or not. Also, looking at the stock market is really important. We can see the Nasdaq 100 made its way up from a retracement very strongly. The Nasdaq 100 is just disregarding Evergrande and just about everything else. What we can also see is the fear gauge, the VIX, has been backing off. And when fear comes out of the market, optimism and greed enter the market, and we can see that here. We can also see light crude oil is just potentially recovering a little. Bond prices are heading down. That is really good news for the crypto market. Bond yields are heading up, but they're going to strike a level of resistance. Just beware of that. The bond yields, when they head up, is a very good sign for crypto. Gold is making its way above resistance. And the DXY, the US dollar currency index, has broken out of this particular resistance level and it's going for it. Let's have a look at some on-chain data. We can see the circulating supply of Tether increasing. We can also see USDC, the circulating supply, increasing. We've had a bit of a reduction in BUSD circulation. When we look at the Bitcoin stablecoin supply ratio SSR oscillator, we can see that stablecoins are making the way into the market and actually funding upward price momentum in Bitcoin. This is a bit of a hidden indicator that's very powerful. We can see an upward support in price. Don't forget that sometimes price comes down, but interest is there. And when we notice that, for example, the SSR oscillator comes down, typically price comes down as well. You can see this playing out time and time again. When the oscillator is going up, even if price is coming down, it's really well supported. We can see this back to the 22nd of May, around the 20th of May, when everything sold down. It's actually really healthy for the market to cool down, to not get too overstretched. And that is because it fuels higher and higher prices. If everything goes parabolic, like what we witness towards the end of bull runs, we get euphoria. Euphoria is measured by so many different things, but it's all about crowd psychology. We're not anywhere close to euphoria at the moment. Not surprisingly, Google Trends can track Bitcoin's term. When we get up to that euphoric peak, everybody is looking at Bitcoin, everybody is searching it. We can see that was for the last bull run, the 2016 bull run. We can see that interest is just wavering. It's fairly low at the moment. That gives us a lot of confidence that the top is not in. Euphoria is also witnessed by a lot of new activity on the chain. Basically, a lot of new addresses in Bitcoin are created, and we can see by looking across the market, we know no alt can escape Bitcoin's gravity. If Bitcoin is going down, it's going to drag the whole market down with it. But if it's coming up, it's going to drag the entire market up with it as well. I see this nothing more as a really healthy correction on the way to very much higher prices. Here we can see that there are definitely new addresses coming into the market, but they're not spiking up under any form of euphoria. There's a very stable relationship between futures open interest across all exchanges and Bitcoin's price. You can see Bitcoin's price is this white line. The bars are the total open interest. We can see the price coming down. Total open interest at the moment is 25 billion, and the most current figure is 25.59 billion. For Bitcoin options expiring at the end of the month, what we can see is there is an expectation in the market of higher prices. The max pain price of 60,000 has not changed. The put-call ratio 0.4 and total open interest 40,990.5. Looking at the crypto fear and greed index, we can see optimism is really high in the market and has been high for quite some time. For those interested in the KSModel predictions, I wrote up the KSModel around 175 days ago, around May 25th. If you go into the Medium article, and the link is in the description of this video, it will take you step by step through the KSModel. The most important thing to note in the KSModel is it is all about technological adoption. Crypto is the next internet. It's the internet of value. We can see that the internet grew very, very quickly from 1992 to 2006, and we can see crypto is growing far, far more quickly than that. As of June 2021, Fidelity Investments had $4.2 trillion of assets under management. Fidelity Investments put out this analysis. They're estimating $1 million per Bitcoin in 2026 onwards and $10 million per Bitcoin in 2030 onwards. It's really important to understand these large financial firms don't just pluck a number out of the air. They run the numbers. They've got a lot of statisticians and actuaries and quantitative analysts working for them, and they are very well paid. They come up with this particular analysis to show institutional investors and other high net worth investors what the opportunities are in Bitcoin and, of course, crypto. Over time, Bitcoin is going to continue to go up. This is just the mathematical properties of Bitcoin, and I do expect that there will be a bear market, absolutely. It's baked into the source code. But those bear markets are getting less severe. We're seeing less sharp declines, which is fantastic. And of course, we're getting greater adoption. Nearly $93 billion worth of Bitcoin is owned by ETFs, countries, public companies, and private companies. We can have a look at the countries that own. For example, El Salvador doesn't own many if you think about it. Only $70 million worth. We would expect this to dramatically increase. Also Finland, Ukraine, Bulgaria, Georgia. We're going to see more and more and more countries take ownership of Bitcoin. It is a scarce and limited apex digital asset class. Each day in our community, we focus on wealth, financial wealth, but also real wealth. Real wealth are the components of life that make life truly enjoyable, such as inner and outer peace, fulfillment and meaning, purpose and fearlessness, empathy and love. The greatest challenge that you will likely ever face as an investor or a trader, and you know that all investors become traders anytime they buy or sell, is the focus on self-sabotage and self-doubt. When you're putting your money into the market, especially such a volatile market like crypto, of course you don't want to lose money, and you can lose confidence really easily unless you approach it in a specific way. The first step is to understand how to beat self-sabotage and self-doubt. As you are totally unique, there will never be another one of you in this world for all eternity. That automatically makes you worthy. And knowing that you're worthy and unique, you also deserve, by default, kindness, love, meaning, and every success in life. Of course, we will all make mistakes on life's path, but mistakes are simply learning opportunities, and losses are the tuition fees of markets. All market participants pay losses. They have to pay their tuition fee. But if you can put it in the right context, that fee will get less and less and less over time. And you never pay a tuition fee until you sell. That's also really important to understand. Unfortunately, I'm a little bit under the weather today, so I'm just going to do the one video. I hope it's helped. I hope you found the video useful. Please consider sharing and liking this video if you think it will help others. Thank you very much to our moderators for keeping our community safe from scammers. Please say hi and let me know where you're viewing from and if you have any questions. If you would like daily updates on price movements in the crypto market, please subscribe to YouTube. I've left helpful links in the description of this video. Please remember, crypto is volatile. Always prepare yourself for the best and worst case scenarios. Reality will likely be between them. Stay safe out there, take care, and see you next time. Bye for now.